by the time we get to 2034, I think you can say the high growth institutional adoption phase of Bitcoin has now moved to just the growth phase. There'll be a day when there'll be 200, you won't be able to name them all, right? There'll be a day when Bitcoin ETFs have already blasted past gold, and then Bitcoin ETFs trade more than the S&P index ETFs. And there'll be a day, I believe, when Bitcoin ETFs will have more capital than SPY or the S&P index. And on that day, the people at Vanguard will say, oops, I guess all the money just shifted out of equity. I think that we're in the Bitcoin gold rush era. And it started in January of 2024, and it will run till about November of 2034. It's a 10-year.
Michael Saylor opens by defining the current period as the Bitcoin gold rush era, starting in January 2024 and running until November 2034. He sees this decade as a transformative period for Bitcoin, particularly in terms of institutional adoption. Historically, institutional investors have been unable to buy Bitcoin due to various constraints. However, a significant shift occurred in January 2024, making Bitcoin accessible to a broader range of investors. The introduction of Bitcoin ETF plays a crucial role in this transition. Currently, these ETFs are distributed through a limited portion of the distribution channel. Saylor predicts that this distribution will expand significantly over time, from the current 10 to 20% to potentially 80%. As the distribution network grows, more investors will be able to buy Bitcoin ETF, further driving adoption. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
If we're talking about the future of Bitcoin, I think that we're in the Bitcoin gold rush era. And it started in January of 2024, and it will run till about November of 2034. It's a 10-year. Every single institutional investor would have looked at this and said, Bitcoin interesting, but I can't buy it. You know? Everybody. And so you have 99% of the money in the world that has been unable to buy and so unwilling to consider things. Institutional investors are like this. Like they could watch your company and like have a million opinions but don't really care. And you could go to them on a Tuesday morning and say, do you want to buy $50 million worth of this security? And they'll then look at it and they'll give you an answer by 4 p.m. So when they can buy via their bank, their institutional wirehouse, their prime broker, they will make a $50 million decision in 1 hour. And they will watch you and cheer for you or laugh at you for 20 years when they can't buy. So we flipped a switch in January. What you've got is 40 quarters of people getting educated, and here's what happens next. All those ETFs, they're only distributed through 20% of the distribution channel right now. They're maybe even 10%. So that distribution is going to go from 10% to 20 to 40 to 60 to 80, and there'll be a point at which all the investors can buy. And you know, I had to fill out. You have to fill out 3 waivers from 3 different accounts. As of a few weeks ago. So you're going to see resistance drop. You're going to see all the major banks add support. Then the next question is, well, is it creditworthy? Can I borrow against the asset? No major bank in the world will give you a loan against those ETFs yet. They've all got clocks that are running after 30 days, after 90 days, after 6 months, after a year. So first they let you buy it, then they loan you money against it. None of those instruments can you trade options on. You can't buy or sell puts and calls on a spot ETF. That'll be a year. So what you're going to see is it'll take years for the distribution to open up, for the credit capillaries to work, for the volatility trading to kick in, for the hedging to kick in. Then you'll actually see all the big banks that don't like Bitcoin getting pressured. Like now we have to custody it because our biggest customer wants us to. So right now you can't custody, but there's a big battle afoot on Capitol Hill. That battle will take place. Bitcoin will win that battle. Then you'll see banks custody. Then you'll see 1. Then you'll see 10. Then you'll see 100. Then you'll see 1,000. And likewise, there's famous analysts. You can name the analysts that cover Bitcoin today. Len Alden, Chris Kuiper, right? Yassine, right? There'll be a day when there'll be 200. You won't be able to name them all. Right? There'll be a day when Bitcoin ETFs have already blasted past gold, and then Bitcoin ETFs trade more than the S&P index ETFs. And there'll be a day, I believe, when Bitcoin ETFs will have more capital than SPY or the S&P index. And on that day, the people at Vanguard will say, oops, I guess all the money just shifted out of equity. But that day won't come tomorrow. It'll take many, many quarters. And by the time we get to 2034, I think you can say the high growth institutional adoption phase of Bitcoin has now moved to just the growth phase. And some of them went on to buy Bitcoin. Many of them bought Bitcoin and then they sold it when the market crashed and they disappeared. And then I would see them again and they say, yeah, I guess I shouldn't have done that. Then I had, then I think probably, the number of people interested has been building steadily since the beginning of 2023. Right, 2022 was a difficult year where you just had to explain the crypto crash. But I think every single quarter since 2023, the number of inquiries and conversations have built and they've become more constructive. And I think the difference today is now you start to see a lot of big names like Citadel and BlackRock and Fidelity and the like that own stock in my company or they're into Bitcoin. And so I think my status as an institutional spokesperson of Bitcoin is dwindling, and now that torch is being carried by the analysts at Fidelity or BlackRock or Bitwise or ARK or many of the other ETFs, and I'm happy to see that.
Saylor anticipates that the next generation of institutional investors will approach Bitcoin with a more strategic mindset. Initially, they may buy and sell Bitcoin to capitalize on short-term gains. However, over time, they will come to understand Bitcoin's long-term value and adopt a buy and hold strategy, similar to how investors approach tech giants today. A critical challenge in the Bitcoin ecosystem has been the credibility and reliability of institutions offering loans against Bitcoin. Saylor points out that issues in the past were not due to the volatility of Bitcoin, but rather the instability and lack of transparency of the entities providing these loans. As major banks with trillion-dollar balance sheets begin to offer Bitcoin-related financial products, these risks will diminish significantly.
You'll see in a generation of institutional investors, they'll buy Bitcoin because it's going up, and then they'll sell it after they've made triple profit to take some money off the table. And then 10 years,
right.
in 2035,
Right.
they'll look and they'll understand it much better. And then
Right.
they'll think, like the way people think about Microsoft and Apple today, which is you just never sell them, you just own them forever.
Right.
Yeah.
Yeah.
And by 2035, they'll probably say, now I think I'll just own it. I don't think they'll have any problem winning against Bitcoin because they've already got... The problem with these other examples is they're all wildcat banks. I mean, people are going to... Nobody in their right mind would put money in a private, opaque, unaudited operation run by two dudes out of their garage offshore without a mailing address, right? And so the problem wasn't borrowing against Bitcoin. The problem was actually dealing with, people running personal banks out of their basement, and they didn't know how to run a bank. the way all these wirehouses work right now is you have a portfolio of assets, they mark them to market every day, and they give you loans, margin loans with loan to value no more than 50% or something, and actually they will adjust the advance ratio. And the way they manage risk is they just mark them to market. They already know how to mark to market. With Bitcoin, they'll just be able to mark to market 24/7, 365. And normally the way they work is they would say, well, we'll give you a loan of X. If your portfolio is Apple stock and Microsoft and Bitcoin, they'll give you a loan of up to 20, 30% of that. And then if those things trade down, they'll just ask you to post more collateral, pay off the loan. And that's a business that works perfectly fine for the last 40 years. All their systems are wired. And the risk here is the people that got screwed in the Bitcoin loans, they didn't get screwed because the Bitcoin collateral went bad. They got screwed because the bank stole their money, right? And so here you have JP Morgan, Citigroup, Bank of America, Wells Fargo with trillion-dollar balance sheet. They don't normally steal their clients' money as a normal thing, right? They're too big to fail. And so I think that, anybody wanting a mortgage or wanting a credit card or a home loan, they would normally go to a mega bank anyway. And the problem in the market is those banks haven't custodied Bitcoin, and because they don't custody it, it's not part of the collateral package. And there are a lot of reasons why they haven't or they couldn't. But as soon as they can, I actually think the rest of the credit issues become very straightforward. And you'll find a bank will give you either that margin loan in lieu of Apple or Microsoft stock, or sometimes they'll give you a mortgage and they'll say post some other assets as security against the mortgage, and you end up posting some securities, and you get a 30-year mortgage with some securities posted to get it going, and they may just take Bitcoin as that security to top up your mortgage or refinance it.
The integration of Bitcoin into traditional banking services will simplify credit processes. Major banks already have the systems in place to manage loans against a portfolio of assets. As they start to include Bitcoin in these portfolios, the process will become seamless. For instance, individuals may use Bitcoin as collateral for mortgages or other loans, further embedding Bitcoin into the mainstream financial ecosystem. Saylor concludes by emphasizing that the future of Bitcoin is bright, with institutional adoption set to drive its growth over the next decade. As Bitcoin becomes more integrated into the financial system, its role as a stable and valuable asset will become more apparent, paving the way for a new era of financial innovation. Please like and subscribe my channel.